Okay, let's try to open the that. Hi, dear. Welcome back. Let's start the theme volume 2, part 2. I think the previous recording was get stopped, so restarted the recording. So here we are working on the part 2 and continuing the volume 2. Today is 15 August, Saturday, 46. I have one more question from the participant. That is a pure VAT associate. So I'm happy to assist on that. So let us cover the session at the end. You may open the mic and discuss, so we can answer on that. So, but primarily we welcome purely the e-invoicing point of view. Primarily the topic this we will cover come on the VAT. Then we'll definitely take that quiz also. So anyhow, still welcome for the quiz also that you shared. But let us cover the our existing agenda. So at the end you may can discuss that quiz also. Let's start because we have one for the same training. We have the we prepared some quiz also that also we can share with the live quiz. Thank you. The goods and services require different place of supply evidence. See, normally the question that come up with limited view. See, the limited view is sometimes the answer go other way around. So this is the critical part because as a practically very simple to say yes or no. But the ground reality may differ as in one of the previous slides, what we discuss here. The ground reality must be supporting with the documentation. I think one of the slide which is look into that. And here let's come to the slide. Goods and services require different place of supply evidence. Okay. The word evidence is very critical and very important also. The goods type location of the goods. Okay. The shipment, delivery, installation, and the custom movement. The question is now one of the participants, the custom movement. Okay, the documentation is very important. Ship to warehouse, custom references, delivery date in code terms. Okay, because as a standalone, many things may be. I'll share one example just for understanding. In Europe, one of the country, because Europe is, the mostly they are nearby 26 countries, European Union. Let's say the Netherlands, I'm taking the example of the Netherlands, and the associate country may be the Germany, Finland, and any other country. For excise, they used to charge, let's say, 10% of the excise duty on the product. So they are annually they are getting the revenue as a state. They are having for 10 billion. Okay. So for the excise item, they have the internal discussion. We have the more expenditure. So we wish to take to the 14 billion euro the revenue if from here to cover the government expenditure. Right. So they made the duty from 10 to 14%. Right. So by end of year, the revenue went to the 8 billion euro. Although they increased the duty, but the revenue is reduced by the 2 billion. As a policymaker, they said our revenue, we can cover our expenses, but here the loss is another 2 million from the previous also. Overall is the 6 million, but comparing the previous is a 2 million revenue loss. The concept is that the policymaker looking only the one side, but how about the surrounding facts? Surrounding facts. What is the surrounding facts? The Netherlands neighbor country that where the excise duty is maybe the 8%. Netherlands, the neighboring country, because European Union, there is no precisely the border. People may go by transport. Okay. So here the cost is almost double. And maybe the people living beside the border. Okay. So the tobacco product they can take from here where the custom excise duty is left. So eventually what happened? So the people start buying from here, whatever the quantity. That's why the only 2 million is get reduced, right? So such factor also have to be policymaker consider, okay, either our neighbor country keeping the 8%, we are making the 14%, enhancing that. So what is the opportunity cost? They will not buy from the Netherlands, they will buy from here. The concept is for understanding as for the VAT registration, eligibility is one thing. The other ground reality, look into the transaction analysis. Is somewhere you gonna impact without having the valid TRN? Number one. The second, maybe you have service invoices, you taken the service, you have input VAT. So understand the input VAT, how much you gonna lose on that if the legitimate VAT that you may able to claim. So when we talk about the facts and associated circumstances, so I think comprehensively we have to look into that. So I just try to give the example, one of the question I just seen. Of course, we're going to discuss specifically, but the overall, if this view is not there, the decision cannot be taken, right? So here we are saying we have to look for the Incoterm. Okay, for goods, the Incoterm is very important. As previous example, we said Incoterm 2020, the latest one. Ex work is a different treatment. Okay, DDP is a different treatment. The contractual term have to be defined in their commercial paperwork. Next is the services. The services supplier, recipient, establishment, performance, use, enjoyment. So again, such the evidence. Okay, who's the supplier, who's the recipient, establishment, right? Who will gonna perform that service? Who gonna use the service, who gonna enjoy special rule may apply considering the facts to facts. Okay, service location, right? Recipient entity, what contract is saying, project, tax reason. So such are the key evidence that we have to look in the contract and the similar fact we have to enter into our ERP. Now at transaction level, when we discuss transaction level, the accountant or the junior accountant, if the junior accountant, transaction level, if the junior accountant is part of your team, so if you enable us such contacts, so then he will enable to understand. So what are the information from the contract we have to record into the e-invoice? The important facts, because the person sitting the finance at the top, he may not able to understand, right? If the facts are there in the e-invoicing document, then he may able to understand the transaction. So this is the reality and the facts that we have to document. If we can enable our ERP to capture such document, I think that will be give the value addition the people sitting on the top. But that from the contract we have to taken care and embed into the ERP. Mixed or bundled. Okay, this fact is not only for the decision making as a supporting reference whenever the authority may require the information, you can quickly verify that part also. Mix or bundle determine whether the component from a single or multiple supply. The place of supply in one document, if you have multiple line item, So maybe the each line item tax implication may differ. Separate lines, allocation, product and services. One invoice maybe have two line item for goods, one line item for services, right? Or maybe one is a combined as a bundle. So such analysis or documentation must be there. Then you have to see, here we are preparing our base to how you gonna test your readiness, how you gonna test your system, how you gonna test your contracts. When you prepare that, then maybe you're able to read the law and classify where we have to classify. So this is the treatment or the functional gap report. The place of supply evidence should be retained before the document type is finished. The place of supply, we've seen the couple of the possibility, the evidence. If we're gonna establish that, maybe you're able to understand what is your position for the transaction. Tax invoice or the commercial invoice. So this is the document type that we are discussing from since morning. The answer following VAT obligation, not the document name, is used by the business. Let's understand. The decision point, VAT obligation required where UE VAT rules require a tax invoice. If the document aligning with the VAT regulation where we will issue the tax invoice, if that document as per the VAT regulation is not required to issue the tax invoice, then we're gonna issue the commercial invoice. This is the one of the question, the deposit that you received. What the analyze from the VAT perspective, if you are outside the VAT, then issue the commercial invoice. The next typical example, domestic taxable person, B2B, B2G supply, qualifying zero rated supply. Qualifying zero rated supply. Typical example means we have to look at factors. Domestic supply, B2B or B2G, then qualifying zero rated supply. The next is the out of scope transaction. Okay. Again, it will be, if you establish these facts, then you are able to take the decision. It will come under the tax or the commercial. Commercial will come when it is not falling under the tax invoice, then it come under the commercial invoice. Outside scope transactions, certain are excluded, are non-tax business invoices. Okay, the exclusion they given on particular one area, okay, the airline, and they are not so far coming under the e-invoicing. And then the transportation, the international transportation, up to certain, they have the some exclusion. Okay, any of the commercial invoice, whatever is not falling under tax, so that more likely fall under the commercial invoice by considering the excluded or non-tax invoice business transaction. Now the ERP treatment tax category, VAT total, tax point, and statutory particular in the VAT treatment under tax invoice, we have to consider the commercial invoice, the commercial document type, scenario code, and supporting evidence. So this is under the commercial invoice, because here we have to choose for the tax. We have to, when we come under tax, we have to tax category 5% zero rated, whatever the applicable, we have to look into that. And here the document type and the scenario code. The code means as per the print A format for the e-invoicing, certain codes are there that we will learn in the next session, more likely next session for the ERP and the print AI format, where detailed understanding will be enhanced. Now the e-invoicing, electronic invoice vary in the scope. This is called the e-invoicing, electronic commercial invoice where the system applies, right? On the similar way, the credit note also will be issued wherever the difference in the quantity or difference in the terms. So again, it's required to correction must remain linked. The important point, it should be linked with the original transaction. Against the original transaction of the sale tax invoice or commercial invoice, you have to issue the the credit note. For tax invoice will be the tax credit note, commercial invoice for the commercial credit note. Uh, Original, see here the original document, starting point, then you have to establish the reason why you are issuing the credit note. So far, another major drawback, the people are issuing the credit notes frequently and without mentioning the legitimate reason. Legitimate reason. We have one case scenario where they issue the invoice for the let's say 1.5 million. They issue the just give me 1 minute. I have some. Okay, let's continue with that. Okay, so now we are coming back with the same. We cannot issue the tax invoice, and I'm going to share one actual example. And people face they issue the invoice for 1.5 million. Okay, based on whatever reason, after 1 hour, they issue the credit note for the same. Maybe by mistake they issued, maybe due to any reason. But the point is that they do not have any valid reason, do not have a valid reason to issue the credit note. So now they come up in the tax authority, okay, the some document is number, sequential number is missing. They look into that. They said, okay, this was the invoice issued and the credit note is applied. They said, okay, give us the reason. But they are not able to justify the reason why they issue the credit. So authority remain questioning. Okay, now they apply the VAT 5% on this amount plus the administrative penalties as your failure to give us the legitimate reason for issuing the credit note. The point to highlight that this is not the casual credit note that we used to issue before in our ERP, and we are changing the invoices frequently. So be careful. Authority will consider each reason whenever you issue the credit note. And the approval, because in ERP, you may mention, okay, the reason must be there, supporting must be there, then you approve, then credit note to be issued, then exchange with the ASP and the reconciliation factor. Reconciliation means the commercial invoice against the same invoice you are issuing the credit note. So the amount of reconciliation will be matched. Typical trigger cancellation of the transaction. What does it mean? If such scenarios are there, so that will be critical. The reduction in consideration, full or partial refund, administration or numerical error. Because why we're issuing the credit note, so maybe cancellation of the transaction, reduction, but it's not enough to writing that, okay, the order is cancelled. So you have to provide the supporting documentation. Okay, this is the reason the contract is cancelled. the delivery is returned or whatever the additional. So the point to highlight, understand the sensitivity. This is the FTA facing documents. This is not anymore client facing document. This is the legal document. The critical control, original document reference, correction reason, approval, adjusted taxable amount, and the VAT status, duplicate provision. These are the controls. You may not issue the duplicate invoices. You may enable in your ERP. The credit note here, the primary credit note is not a standalone document, is a part of original document audit trail. In ERP, normally they link the credit note with the original invoice. In the e-invoicing also, you have to link with the same invoicing program. So here the advance payment create a early text and the invoice event. Cash receipt, contract, supply timing must be reconciled. So we just prepared the common some question. Was the payment received before supply? So assess text point, advance invoice requirement. Even you are issuing the advance payment, commonly in people, market, people is not issuing the invoice for the advance receipt, but that is taxable transaction. Okay. So if you are saving the advance, so we have to apply the VAT and we have to document in our books. Is the customer B2B or B2G or B2C? Identify the scenarios, apply the correct program and document logic, right? B2C is not in the scope. Okay. If you are doing B2G, you should not issue the invoice, right? So anyhow, will the advance will be offset letter maintain reference from the final invoice to the advance payment. Normally in the construction industry is very common, like 20% advance payment, then the progress adjustment from each invoice. Let's say they raise 30% invoice, so now they will take 20% of the 20%, okay, and they will reduce from here because this is the PO 20%. Okay, so here 20% from allocation to this, right? So here maybe they issue the adjusted amount, whatever your adjustment. Let's say I'm going to take the example here, the progress payment. Okay, so let's say that 6% they reduced. Now you're issuing the 24% invoice. So what FTA is need this clear invoice. What is the backend you can establish, keep in our your ERP, right? FTA is not looking for this breakup. You already offset against your total amount you deducted. You can do outside the ERP. Mostly in construction industry is a typical. They prepare the progress payment flow or the one checklist, and they are adjusting over there. So they call the payment certificate. Okay. So you can adjust and net amount come up with the e-invoicing in the system. So because is the next invoice 20%, again the 20% of the 20% advance will be adjusted and a balance will be invoiced. So here this is the advance you are allocating, but in the print AI format, maybe such adjustment is not fields are not there, right? Maybe as the additional field, you're going to share the additional data. As we heard, some of the ASP additional data may work because as long as you are keeping the mandatory field. But again, I think as long as we are sharing the additional information to the authority, it may come some complication later on. So you can do the backend calculation, payment certificate outside the e-invoicing and issue the clean invoice in the e-invoicing portal. What happens if order is cancelled? Trigger credit note or refund process with original reference. So the original reference that the audit trail must be there, invoice issued, and it must be there. All documents, same reference must be carried on for easy reconciliation. And mostly the e-invoicing, the PO number is not there. Under e-invoicing at the print A format, PO number is not mandatory. Maybe other additional some ASP they add the PO, but is that is the internal control, not as a requirement of the e-invoicing. Does the ERP support advanced settlement? Okay. avoid double revenue, bad duplicate invoice reporting. Okay, if the ERP is supporting that advance, of course, most of the ERP they already have the inbuilt function, and some of them still as a payment certificate they are carried on, right? So the ERP may support and manage with that. Okay, but when they feed which data from the your ERP will flow toward the ASP, so that is the print AI format. So that field will be integrate here, right? ERP maybe have all the information, what are the print AI format, that information will flow with the ASP. Continuous periodic supplies requires text point discipline. So some services are the recurring nature, like the uh, Netflix, Netflix subscription monthly we are paying, internet monthly subscription we are paying, right? So this is what they call the frequency. Even the frequency is there, but still we have to analyze the transaction. Does not replace the legal transaction analysis, which means analyze the transaction. Recurring services, subscription, maintenance, telecom services need controlled billing period and service dates, because the law is very much strict while coming to the implementation or the implication. Utilities and usage data meter period billing cycle must be aligned with the text point and invoicing. So this is the normally is a different industry that maybe few people are a part of that. They must know, so, okay, that their system already designed considering such parameters. Construction billing progress certificate that just we discussed in the previous slide, progress certificate, valuation date, advance, retention, variation scenarios. So see, this is the facts and the circumstances that must be there even you are raising the tax invoice or the commercial invoice. ERP configuration should prevent arbitrary invoice date, and that does not match with the approved tax policy. See here the internal control, whatever you can document in the ERP. So here we're gonna jump to the imports are not the same as domestic e-invoicing obligation. So let's understand, because how and what gonna happen with that in case of the import. Imports are not the same as domestic e-invoicing obligation. Separate okay, the foreign separate foreign supplier document, custom VAT, downstream sales. Let's understand rest of world supplier, the international supplier. Okay. Inbound transaction, foreign supplier invoice is not a UE issued electronic invoice. This is what the common question is coming. Our supplier is outside country. So whether he will issue the tax UE invoicing, or we gonna issue the E invoicing. So we earlier understand the e-invoicing initiated mandate from the seller side. Now you are buyer side. So there is a no e-invoicing, but as a standard protocol, import will be there. Import RCM VAT will be there. Either you paid or through the in your importer code. Custom declaration will remain your supporting document, and reverse RCM consideration follows separate. So that we standard procedure will remain there. There will be no e-invoicing. This is the commonly we receive. Okay, what will happen on that? So the next, of course, they will issue the commercial invoice. Custom import will be there. If you see on header, this is the flow. International supplier, they will issue the commercial invoice. You will make the custom import, then the UE importer, because we are the importer. Okay, we are buying the local or export sale, At that stage, we have to assess the e-invoicing. So this is the stage, either local or the export, you have to look into that. Downstream transaction, UE traders subsequently B2B, B2G sales must be analyzed independently. Domestic free zone export outcome may differ. So understand the facts, document the facts. See, understanding and the documenting the facts is a major difference. Mostly people discuss theoretically by sitting all the department, and they do not document. And later on, everything will be, the gray area, who will take the ownership. So e-invoicing will be more responsibility oriented and document oriented approach. It will define everyone's responsibility. Do not carry the foreign supplier document classification into UE sale transaction. This is the one point that we are understanding when we purchasing from international. There will be no e-invoicing. Export require evidence before zero rating or invoice decision. Customer location alone does not prove the bad outcome. So far, since the beginning, we are understanding the contracts, the facts to be a document. If you are modified your ERP, you are added the additional field to take the key facts that may impact the e-invoicing. So I think that will be the great, because it will be easiest way for the person sitting at the finance head or the compliance head. He can trace the the review the any error is happen or not happen, instead of every time he have to go into the contract and look what are the terms are there. So we principally are done couple of Udo implementation where we have inbuilt all these features. Even more particularly, we are implemented the Udo in the designated free zone, where we covered the designated free zone, the FTA front facing the supporting the reference or the documentation. Because as maybe you know, the from 2026, all the designated free zone person have to be make this special sorry AUB agreed upon audit. Apart from external audit, special audit to be done based on the scope and submit to the FTA. The goods exported. So the customer outside name, country, contract, establishment, evidence, goods are exported. See, this is the customer level. This is the transaction level. Custom exit proof, bill of landing, airway bill, delivery, transportation record. Then the service exported, recipient establishment. Where is the recipient establishment? The benefit, performance, UE connection analysis, right? So that I just sent one picture today in which they given the similar example for the UE connection. Okay, the service is performed outside. The beneficiary is outside UAE. That example is given by law. Any lawyer given the service to the international customer, and he will be inside the UAE, even his establishment is, let's say, the Europe. The person who's employee of that establishment inside UAE more than 30 days. So this is the 5%. Just see the law. They said previously they said or, now they saying and, right? So transaction by transaction, if you analyze, you may understand, okay, so far we haven't documented the transaction fact. So how are we going to apply the, the VAT regulation or the e-invoicing regulation? So break the facts in the bullet points, and then you make yes or no, yes or no, yes or no. At the end, you maybe understand what are the the legal implication. ERP configuration export text code. reason code, commercial, and the text document. Again, this is the technical part, exporting text code. What is that? Reasoning code, commercial and tech. So these are the IT part more and the ASP part. If the previous information are there, this is the implement configuration part. E-invoicing conclusion, apply current scope and endpoint and default and identifier routes. So the free zone and the designated zone are not interchangeable conclusion. Entity location is the only fact in the VAT decision. Entity location is the fact only in the VAT decision. Ordinary free zone and the designated free zone, the both have to be treated accordingly. Generally part of the UE for the VAT purpose unless specific rule are applied. Designated zone special goods rule may apply when condition and services are satisfied. We have seen the supply terms X work and ADV in the designated zone. The VAT treatment gets changed. Okay, services designated zone treatment does not generally convert services into out of scope supply. Is what is saying generally is 5%. The mainland movement are the consumption in our mainland may alert the VAT outcome. Again, this transaction flow is very important. Flow is very important. Mostly the transaction flow from the designated zone point of view, corporate's point of view. If the flow is not documented, so maybe you eligible for zero rated and you haven't document the flow. If you not document the flow, so maybe unintentionally you are part of the transaction. Part of the transaction, because if you not document, there is no control. No, as the exception due to scenario, you have done one transaction for that may lose the 0% eligibility. So here is the important document the business, document the transaction flow, and all the team member must be familiar with that, right? So as long as good as you document your flow in the ERP, it will be good for the both parties. Next, this is a drop shipment. This is mostly for the e-invoicing point of view. The seller, buyer, customer, the goods movement. This is the mostly people are familiar with the high C sale, cross trade. Considering the time, we're gonna just quickly jump on that. Mapping this separately, map contractual, seller, buyer, physical origin, destination, importer, exporter, VAT registration. So more likely this is for the e-commerce businesses are relevant. So I'm coming to the next the last section in that part, self-billing. Earlier we discussed the tax invoice and the commercial invoice. Under e-invoicing, there is another third main category is the self, because total is a 6 category: tax invoice, tax credit note, commercial invoice, commercial credit note. The next is the self-billing and self-billing credit note. Customer issue the document, but both party need align the controls. So self-billing, there is certain businesses or the transaction where the buyer issuing the invoice, not the seller is issuing the invoice. And this is already agreed and in the contract is already mentioned. Certain businesses, there the factors are not identical. So when the buyer receive based on the agreed terms and condition, he gonna raise the self-billing, okay, self-billing invoice, right? So this is within the scope of the e-invoicing. First, agreement document self-billing arrangement is already mentioned. Scope responsibility is defined. Then buyer is liable. Master data, supplier identifier, bank transaction, all these standards, supplier acceptance and dispute process for the issue document, domestic logic, correct invoice, credit note topic, ESP. These are all the standards. So here only the concept is that, let's say the one scrap metal. Okay, the quality or purity of the metal is not, the supplier is saying different, and the buyer may disagree on that. They will say, okay, once we receive the scrap, we will do our analysis or the control testing, and we will let you know what is the quantity and what is the price, because they already agreed in principle in the pricing. But if quantity, let's say, is the let's say they have the table grade 1, let's say the 100, grade 2 maybe the 80, grade 3 maybe the 70. Now quantity remains same, but the grade is changing. So they already have the arrangement. Okay, once you receive the shipment, you do analysis based on the grade, apply this slab. And if you apply this slab, you have to issue the invoice also. So this is called the self-billing. VAT group require member level operational clarity. This we discussed today. VAT group does not remove or need to identify the transaction entity. So what we mentioned, that each entity TN and TRN must be traced. Supplier entity invoice must reflect the correct transaction number and relevant text. Okay. In the text group, if the company A is the representative, but text invoice issued by B, so his TIN must be there as a traceability, even if you are part of the group. This is the e-invoicing requirement. Buyer entity, customer master must capture the correct legal entity and group status. Okay. Intra-group treatment tax temporary exclusion and special treatment must be monitored against future effective dates. Currently, they mentioned the 24-month, but maybe after 24 months, they may extend another period, or they will say, no, you have to start the e-invoicing for the intra-group also. ERP design, each member need controlled company data, participant and ASP routing. So these are the technical fields that we have to be captured in the ERP. But the principal level, the VAT group, we discuss in very detail. Each group must have the TIN when they issuing the invoice. A will use his, B will use his, C will use, and this is linked with ASP and linked with the FTLs. Okay, so here the government so we're gonna park over here because we have the next phase we're gonna cover in the next session also. But if I say them comprehensively, we already covered our the exercise. So normally the government transaction requires sovereign versus the commercial. Sovereign at the municipality is running their own function, right? Immigration, they issuing the visa. This no other can do that immigration role, right? So that is called the sovereign capacity. The under sovereign capacity, there is a no competitor, no other business running the same function. Now the commercial analysis, if the government is running the same function, okay, and the private entity is also running that function, so that we have to look into that. Okay, what are the transactions is fall under the government sovereign capacity on the commercial. Sovereign capacity regulatory activity may not may fall within the specific exclusion. Okay. Again, see the wording is subject to associated facts. I give you the example for the immigration. So this is the part of the exclusion. Commercial activity generally assessed like other businesses. If they are running the commercial and the other private entity is running, so it will be similar grounds. Government procurement, B2G, supply is generally within the scope, subject to the rule. If government buying from the supplier, as we earlier said, if we are selling to the government, yes, we have to issue the e-invoice. Government entity as supplier, G2G, G2B, and G2G. Transaction classification document must be reviewed. So these are the technical reality. Okay. Here the financial services that is not critical as we earlier discussed. This is one of these sector. The compensation penalties, deposit require supply, no supply analysis. No supply is important where maybe the team supply concept may be applicable. Okay, the procure to buy become part of e-invoicing. This is the very important to understand. Supplier onboarding, purchase order, receipt, invoice, validation, posting, and payment. Because when we buy and we are selling, procure to pay become part of e-invoicing. From buying till payment, all the covering under the e-invoicing. Inbound control, we can say validate supplier identity, participation data, match PO receivable services, capture ASP validation. What I'm saying is validation, the message, the code, okay. Reporting status, at what stage is there? Exceptional, control, rejected or duplicate invoice, missing PO text data, disputed quantity or amount. So why we are doing, we have to document. If we are not document, FTM may trigger the audit. Financial impact, input, VAT support, payment, hold or cash flow, close or reconciliation or supplier communication. Again, this is the integration part, flow part, structural part. So the document must be customer onboarding, front end data, correct legal buyer and identity, contract PO, delivery, reference. We're going to share this presentation also because these are all the standard field and the flow to be run through the while e-invoicing. Okay, so common classification error create downstream system failure. What is that? Okay, treating all free zone sales as out of scope. The myths that we understand and discuss in the morning also. Wrong VAT and the invoice type. Right? Likelihood, if you are not familiar with the transaction facts, you will apply wrong VAT and the wrong type. Transaction level VAT decision matrix, prevent control, as earlier we mentioned, document your contracts, break into the parts, and then say yes, yes, no, yes, no, easily track come up with the question. Okay, so just a minute, please. Okay, next, the common error using a text invoice for every business transaction. That commonly currently is the practice. Currently, because they're saying, okay, we have to keep the unique reference number, they're issuing the all text invoices. That is not required. Even the free zone companies, maybe they are not reporting in the VAT, but they're issuing the text invoices. Actually, that is the require the commercial invoice. Actually, it should not be the text invoice. They may have the document type from the day one, text invoice and the commercial invoice. But practically, this practice is not there. So they are remain issuing the text invoices. And mostly this is the administrative action and even the auditors and the routine VAT filing, they do not come into that stage. So this is the reason they might subject to the exposure toward the authority for the penalties. Incorrect statutory document type. So just now one of the participant, he asked about the similar. Okay, so we will understand how they are processing currently if they would like to share insight. But common, these areas are the errors are common. Assuming zero rated means outside e-invoicing. So zero rated means there is no VAT implication, 5%. So they may consider as a out of scope. Missing electronic document is required, but they not issued. Using the customer group TRN. Okay, just now we mentioned without identifying. So we have to participation or payload failure is there. What is the payload? You're from ERP. when the data go to the ASP, that is called the payload. Okay. Error may pop up over there because your ASP already registered or linked with the TIN number. And now when you're raising the invoice, you did not use the correct TRN or the TIN number. So it may failure at that stage. Okay. Member level master data and validation. This is the integration or the internal control have to be tested. The ASP normally not come up to that level. Your internal team or tax consultant have to look into that. So this is called the gap assessment or the preparation or the readiness of any entity for the e-invoicing. No original reference or the credit note as we issue the invoice without linking with the original invoice. PTG transaction matrix use 5 questions to convert fact into implementation requirement. Who are the legal supplier and the recipient? What is being supplied and where is supplied? Ask these questions as the internal resource, VAT treatment. Look into that. Which document is legally required? What must be ERP or ASP2? Fields, it should be in ERP. Scenario coding, it should be in ERP. Endpoint validation exchange. So consider that point. If every client scenario should produce a written conclusion. So when we see about the gap assessment, this is the whole process that we learned today. This is the part of the gap assessment process. Functional analysis report. When we documenting and capturing based on the contractual thing, not the theoretical contractual thing, it needs the time. It needs the understanding. Okay, today the next is the workshop case. A UE trader with 3 sales channels. Right, let's understand. Import from rest of world, foreign supplier, custom import, commercial invoice, and import VAT. Okay. Sales to UAE mainland, domestic B2B, delivery in the UAE taxable. So here, the participation answer must be there from your side. The first, what we gonna issue? We gonna issue the tax invoice, commercial invoice, or the self-billing. I'll share this slide in the group and I appreciate if you share your feedback one by one. So this is the questioning test, our understanding test phase. So if okay, Jum, please respond to that question, yes or no. The first one, invoice raised on sovereign community will need to be e-invoicing. I think if I'm the first case where even as a private organization, you're issuing to the government invoice, yes, that is the e-invoicing. If this is the case, yes, we have seen the matrix. So in that matrix, we similar point is discussed. Now, the first one, import from rest of world into the UAE. So what will be here? Tax invoice, commercial invoice, credit note. So just give the understanding out of scope. So please reply in the chat. What is the okay? So let's knowledge test question. Can this also I'm gonna share. So I appreciate if you can work on that, but normally participation in the group is appreciated. Okay, so let's volume 2 summary. Code method, classifying the party transaction, determine the place of supplying and the VAT treatment, select the correct document, translate the conclusion into ERP and ASP. So this is the our learning today as a key points. Classify the parties and transaction. Both have to be classified. Then the next place of supply, you have to document and classify and apply the VAT treatment. This is the next. Then correct document type, commercial tax self-billing. Then whatever the conclusion is coming, translate into the ERP and the ASP requirement. So that is the next phase. High risk area, free zone, cross-border transaction is a high risk area. Financial services are no supply event, no supply event. The team supply, you also have to test. Credit note, self-billing. VAT group, we also learned how it will be critical and what are the key factors to be document on that. Participation identifier, we also discussed. And next volume, next Saturday, industry use cases like trading, manufacturing, construction, healthcare, education. So here we have some practical use cases as maybe some participant wish to share their case, so we can document and demonstrate on that without mentioning the names. But the actual use cases we are welcome. If anybody would to share, so we can prepare the demonstration on that. So they will have the actual understanding on that, how it gonna impact. So the volume two we covered. So now we have the next is the quiz. So live quiz session will be there. So in which the certificate will be issued. I think previously, if anybody is did not get the certificate so far, he may text me. We'll do the needful. Thank you very much for your participation and the availability and joining this session. And hope you understand the applicability of the e-invoicing step by step, phase by phase. So now the quiz, we gonna test our understanding. What we so far is learned. So same we gonna test. Okay. So I'm gonna share the in the group the quiz part. So you may go through the join the QR code and answer quickly. So at the same time there will be yes or no will be there. So Atif, you are there. Okay, so
Uh,
let me, yeah.
yes, sir, I'm here.
Will you able to share or I should start from my side?
Yes, sir, I can share from here.
Okay, then you can share the QR code in the WhatsApp group
Yes,
uh,
sir.
and start from there. They can join from there and we will continue. Yeah. Yes, yes. We are coming on that. Just let them complete this quiz. So we are coming on to your question, please. Don't worry, we'll answer. First, start. You send the QR code and send the link also. That will be appreciated.
Yes, sir. A link is sent and QR code is also.
You
May I share
share
the
in the
screen?
chat or not yet?
Okay.
Share in the WhatsApp also. Share
Yes,
with
sir.
me. I'll forward with it. If you log in, please share the screen.
Yes, sir.
Okay. Now something is there. So this is the full screen.
Yes, sir.
I appreciate quickly scan the QR code or join from the link. And one of the participant after that, because 2:30 this we have to close because all the participants timeline is same. But yeah, I will be remain available if any participant have any question. So yes, I'm remain available. We can stay connected. But as per standard schedule, uh, you may leave. Atif, I think you can move to the start.
Yes, sir.
Wait for their. See, this is the important. You're gonna receive the certificate. So such certificate is part of CPD or part of your resume or part of your any career. You may use that. So this is the CPD certificate that from the beginning I mentioned. CPD is very important. New regulation, new implication. How gonna impact? So from that point of view, it add value to your, the your resume, your career also. And this, up to certain professional certification, they may accept this CPD also because they have the criteria for the standard one and non-standard one, like ACCA, CA, ICW. So they have some up to certain number CPD, they consider such CPD also. And by Monday, if you go and you have the presentation, start working on your organization, start applying on your organization, prepare yourself. So far you have very comprehensive understanding. You may work on the readiness that help your organization or your client or wherever you are working so far. Quickly, there is a 12 participants so far. The 5 participant is only the entered the email. The email is important. Why? Because you're gonna receive the certificate on the same email. And let's wait another couple of minutes. I think let's move to the next. So again, came back to the same.
No, sir. Now it's email.
What was the previous? Okay.
Full name.
Okay. Okay, I think move to the next. Okay, so now the first question is coming. This little zoom, please. Is the e-invoicing mandatory for non-VAT registered businesses? First is yes. A person conducting business in the UAE is generally in the scope for the business transaction unless person or the transaction is specifically excluded. VAT registration status does not itself determine the e-invoicing scope. The second is saying only VAT registered. So non-VAT registered business is automatically outside the scope. So documenting and testing our learning, that is the real value that you're gonna look into that. If you are active, you must be giving the correct answer. If you are not active, maybe you are not able to understand what is the reality over here. Okay, let's see with us who's there. Shamna is there. Sahida is there. It is there. Bhagesh is there. Okay, move to the next please. Second, are B2C transaction currently in the scope of mandatory e-invoicing? Yes, all the transactions are already included in the current mandatory e-invoicing phase and must be uh, exchanged through a NSP. Second, no, not for all current mandatory phase business to consumer transaction are not subject to the system until a later decision, and a person engaged exclusively in the B2C transaction is not currently subject to mandatory implementation. Okay, let's move to the next. Okay, so let's see who's as quick as you are responding, so you will have the more scoring of that. Okay, so the next is that what are the mean UAE invoicing implementation dates? Pilot and voluntary adoption start on 1st July. Revenue is 50 million or more. Appoint an ASP is 30 October and go live 27 July. A revenue below appoint ASP is March and go live by the. So here I think we learned in the first also. So let's see. So here maybe we can make the split into three option or four option, because the first is covering the two, both of them. And yeah, if we separate that will be more understanding. You can take care next. Okay. Okay, Lokesh on top, he's quick, Zaida is there, Manail is there, Jamna is there. Okay. Our intra-group VAT business transaction in scope, I think we learned so in very detail and very precisely. Eh, like this, as here, the split the question in the four option. I think that question also have to be split. Okay, move to the next place. Do voluntary adopter face the e-invoicing penalty regime? See, one is the mandatory threshold, but any organization they want to go voluntary before the deadline, you can go. As of today, even your revenue is 3 million, still you can adopt the e-invoicing and join the e-invoicing. But until this is not mandatory, okay, no penalty will be applicable. Your penalty may start after the, in case of non-compliance, may start after the mandatory application date. So as a practice, as a exercise, if any organization wish to be part of invoicing, they can move to the next. Does the e-invoicing replace UE VAT tax invoice and tax credit note requirement? This is the another understanding. The e-invoicing enhancing the existing, the mechanism of the VAT also. The form, exchange, reporting channel, understanding the obligation. Okay, please move to the next. Seven, what if the buyer has not yet implemented the invoice? Supplier may need to provide the buyer with a normal tax invoice or commercial invoice while prescribed on non-onboarding buyer endpoint the reporting process where required by the guideline. Okay, see. Next please. Okay. Let's quickly go to the next because how our export transactions are handled. An export transaction should be issued as an invoice where the overseas supplier does not have a PayPal participation identifier. The supplier should use the prescribed export default and point and retain the required export evidence. Next page. Next. Seems the understanding is refined. How electronic red note handle. Okay, proceed next please. See that each session is a different than the first one. The last Saturday we have that is a different session. This is a different. Okay, move to the next please. Does every in-scope business need to appoint an ASP? Let's proceed next question. Okay, she's fast. We have here the 10 participant and the meeting is, event is, proceed next question. Proceed next question. I think right now Lokesh is on top, Jumna on second. One more person did not mention the name, Manahil, and they are all doing well. Please continue. What should be the convert into the ASP contract? What should we cover? This is the important part. Covers service scope, system ownership, third party dependencies, because maybe many ASPs are white label. The backend system is like ABC and the name is front number different. So they depend on third party. In case of something went wrong, so how you will respond to the FTA? Who will be liable to pay the penalties? So ask in the and they may come up or they mention in their SLA agreement, okay, this is a third party, it's not in our control. So look such perspective also. And when looking to the ASP, try to go with the direct ASP, not direct. That doesn't mean direct means the white label and the ASP. You might go through the consultant, might go directly, might approach the different way, but identify, okay, the ESP itself is not depending on third party. The ESP should not be as a white label to reduce the your the non-compliances or the failure of the system. Move to the next. Your gracious to me on the top. Who on compliance when the ASP perform exchange and reporting? The ASP provide exchange validation, reporting support, but the person or the government entity remain responsible for the person or the government entity remain responsible for complete approval, time pay, compliance record. So this is again the highlighting who is responsible for the exchange and the reporting. Move to the next. Jumla is there. I think someone has skipped with the answer. Maybe he's reading. We are just trying to cover the timeline because I think it's 32 questions. Are designated zone and free zone companies automatically outside invoicing? This is a very common question. And the mostly the understanding is not correct in this. And this is the one of the question that one of the participants is also looking for. Okay, move to the next page. Does VAT, but the designated VAT zone relief the goods remove e-invoicing obligation? Okay, please move to the next one. Again, the point is that transaction analysis is very important. Yogesh retain on the first position, Jamna on second position, and then another person is on third position. Okay, what is special when the customer is a free zone? Okay, move to this next. Yamuna on the first, Yogesh on the second, wrong answer. Okay, move to the next one. What should goods trading business do now? Build a document goods flow matrix covering designated zone to designated zone, uh, designated zone to mainland, import, export, high fee sale. I believe this is the facts analysis that the participant have the question. If we document and break all these scenarios, uh, then we're able to understand better position and may address appropriately. But registered, are we outside e-invoicing? The important part is that our mind should raise the question or the queries. When we have the queries, we are able to get the answer. We only make zero rate supplies and have a VAT registration exception. This is the point where I mentioned the VAT registration exception. What changed for e-invoicing? A VAT registration exception does not by itself determine e-invoicing scope. The entities conduct its scope business transaction, it may still require TIN, TIN readiness, and the ASP and compliance invoice. Okay, move to the next. Okay, move next, please. Number 27 is the private foundation holding asset automatically outside invoicing. Throughout, we are discussing the is at transaction level, not at entity level. When we have to test e-invoicing, we have to test at the transaction level. 28. How should interchange of family recharge be treated? Can move to the next question. How should financial services investment activity be assessed? Check the specifics exclusion for financial services that are exempt from VAT or zero rated under the reference VAT facility. The regulatory standard management fee are not automatically excluded. Okay, move to the next. What is invoicing treatment for the standard rated B2B and B2G supply? Use a text invoice is generally in the scope, unless specifically excluded. Yes, please. I think this is the second last question. Uh, maybe not. What is the current treatment for B2B? What is the e-invoicing for the exempt or zero rated? Yes, please. Yeah, show the results.
Yes, sir. Let me close the session.
Okay.
These are the results, sir.
Okay, the 661st location, I think location only one is wrong. Second, the Mana Health Sahila. The one person I think he missed some by entering them. Yes,
And I think the anonymous one is Shugufta.
okay, maybe. Okay, you have their details, so you may. Okay, good enough.
Okay, sir.
Quickly. Okay, thank you very much. The participants, these participants who registered their email, they will gonna receive their certificate. If you have any question, please, most welcome. Now this session is